CBR Street Gang, this is Almighty. Standing by, over.
The Army Air Forces has announced that a flying disc has been found and is now in the possession of the Army.
Over. CBR Street Gang, this is Almighty. Standing by, over.
All right. Well, well, if I can talk, I can actually ask you if you can see. See if you can hear me okay, not see me okay, because I do not have a camera on me, at least not yet, and probably never. I would like to remain anonymous. But if you can hear me okay, then go ahead and let me know in the various chats. We have quite a few going on right now, including idling in one of the Discords, that being the NBO Discord. So I can observe chat there if you are there. I am not streaming in the server right now, though. If you're on YouTube, Twitch, or X, go ahead and let me know if you can hear me okay. And we're going to get rolling here in just a few moments. Let me go ahead and get this music under control. It's like killing my eardrums right now. Hold on a moment, and we'll get rolling. Okay, it does appear as though you can hear me okay. Let's go ahead and get this music under control, and we're going to get rolling into Macro Monday. This is Market Madness Wednesdays, and we're going to observe what happens in the market, what has happened, and what's likely to occur from here, or the most likely scenarios. And also, we will be streaming during the timer rolled over. I'm going to get started soon. I promise it's not going to be 60 minutes from now. But I still see people piling in here into the chat as well. They changed the interface over there, it seems. It's a lot cleaner. I don't know if the stream is any better in terms of the compression. If you do want a cleaner stream, I do suggest that you head on over to the YouTube channel. It is in the link in my profile for X, and then also it's posted. It was, I believe, the most recent post underneath the pinned post there. Let's go ahead and get the main screen up here, and we'll just get rolling. I'm sure people will start piling in. We got a lot to cover today, including a little bit of review from yesterday's video, where we did talk about this exact scenario. So let's go ahead and jump in. Hello and welcome to Landy's Crypto Corner. I'm your host, Landy. This is Market Madness Technical Analysis Wednesdays. Today is May 1st, 2024, and we have now seen Bitcoin break down below this monthly and a quarterly support, I might add, here coming in from March of 2021. This was the actual the actual quarterly all-time high. So this March of 2021 monthly close is a quarterly close as well. And this is coming in at 58.8. Now, in yesterday's recorded video, for those that did watch it, we talked about this, Bitcoin testing the downside supports. The main area that Bitcoin had to push above to break the downtrend and begin to dig itself out of this particular scenario was to come up here and take out around 67 to 67,200, this last lower high. When Bitcoin did move down from there, from the criteria prior to that was actually much higher. We need to see the higher high taken out up here. And that wick high is coming in just shy of $73,000. So, it was really Bitcoin's chance right in here, right around the monthly support zones there, the March of 2021 to the October of 2021 monthly close between 58.8 and 61,350. So I'd mentioned I wouldn't be surprised if Bitcoin retested the lows at minimum. And the criteria to look out for was any kind of a lower term time frame breakdown of 58.8. And then we were likely looking for at minimum, the meme pullback. Now, what is the meme pullback? So let's revisit this. There are some people here that are not really deep into technical analysis, and they may not know what the meme is. Well, the meme has been going since, Bitcoin's macro low here at $15,500 on spot. Now, that particular pullback has occurred, on the weekly, coming in at around 20 to 22%. You can see that we've got a 22.52% pullback there. We've got another 20.29% pullback here. We've got another 21.85% pullback. We even have a nice pullback here in January. This was right around the ETFs launching. So we had the move up into that event and then the move down to grab some liquidity. That came in at 21.59%. And you're going to notice something pretty interesting here. That would be that Bitcoin has now initiated, in general, it's more than the meme pullback right now. So technically, the meme does not hold true. It was 20 to 22%, 22% on the high end, 20% on the low end there. I think the largest one was that initial pullback from this rejection here. So we had the bear market downtrend. In order to change structure, we already saw the structure change after this weekly lower high was taken out on a close. Came down to find support in that same area around that $20,000 to $21,500, right? Well, when it went to push back up, it swung the next couple of highs here. This next high here at around that $25,000 region, rejected very harshly right back to the basis band. But it was getting expansion, mean reversion back to the basis band. That was the largest move down that we have seen until now. So this particular move is not out of the ordinary. And I want to point out that this is mean reversion back to the basis band of the Bollinger Bands. Now, what are the Bollinger Bands? They are standard deviations away from price action based on the 20 simple moving average, which is the basis. And then you have the first, second, and third standard deviations to the upside, and the first, second, and third to the downside. So when we see a compression, like what we saw here, a consolidation or a compression in price, we see the Bollinger Band squeeze. And then when you see a breakout above or below the, in this case, the above the upper second standard deviation, it goes from compression to volatility expansion. If we were to see that to the downside, then it's volatility expansion to the downside below the lower second here. Now, in this case, we saw a beautiful, beautiful move up, and we have been observing this particular move up since October of 2023. So we've had a lot of fun since that consolidation. Nice big correction here in the middle of that, right around the ETFs launching. And then now we're seeing another big correction, and it just happens to coincide around a very big event, a couple of big events, actually. So we have just went through the halving, which happened on 420, on the 420 candle. Go figure, because the market is playing in meme numbers. And by the way, traditional markets do this as well. You'll see a lot of meme numbers, a lot of 420s, a lot of 69s. It's pretty funny. It's not just crypto. If you really think that the degens and the degeneracy, man, that's hard to say when I'm a little under the weather, so you have to forgive me. But the degeneracy, man, that is, I'm gonna struggle today, huh? It really does come from like traditional markets, so it's not unique to crypto. In fact, if you really want to get into degen trading, go and degen trade smaller stocks. On borrowed open interest, borrowed open interest from against your portfolio, to take out 0-day covered calls and stuff like that. Then you really have basically the shit coiners of traditional markets right there. Now, and honestly, I have more respect for shit coiners than most people in traditional markets. So in this case, mean reversion back to the basis band is fine. In fact, this is not going to be something that anyone wants to hear right now, but even a move down to the lower first, which would just absolutely annihilate any semblance of longs on most derivative exchanges. That's a very unlikely move in my personal opinion, and I'm going to show you why in just a moment, but $44,000, very unlikely. And in this case, I would be looking for, in general, support somewhere around the basis band here. Now, why is that? If we were to go over here and, you know what I just realized? Where did my support and resistance go? Oh, I turned it off. That's right. All right, so some of the conditions have been met. So the meme pullback, you can consider this area met. I'd mentioned even in yesterday's video, I consider the meme pullback zone around $56,000 to $58,000. Go figure, we got a wick down to 56,500. Some derivative exchanges dipped down a little bit lower into the $56,000 region directly. So we're like kind of right on track for the potential meme pullback number. But I want to caution those of you who may have not listened to the second part, which is in order for this to just be that meme 20 to 23.5% now, Bitcoin would need to regain the quarterly and monthly here from March of 2021. That's 58.8 on a daily close at minimum. It would then need to subsequently come back up and close above 61,350, which would give it a fair shot at running the April of 2021 monthly swing high at $65,000. That first swing high and monthly high that was put in back in 2021. So that would give it a fair shot, right? And then above there, it's still not a downtrend break, even from here. This wick high, I would not consider, from a swing standpoint, you could consider this bullish if it breaks above. But the area that needs to be recovered from here, as it currently stands right now, is all the way up here at that 67,225. So understand that it's pressure onto the downside, in addition to a few other things. I'd mentioned the Bollinger Bands here, and you can see that we have a bit of like a downside range forming here. We had some compression to expansion to the downside, rejection at the basis, and then a move down to support, and then a breakdown of that support, right? Now, I've mentioned this quite a few times. If Bitcoin quickly comes back into range here, and in this case, it's got to meet a few additional criteria. We got to see it close back above this monthly quarterly at 58.8. On the daily, that's likely going to be around where the lower second standard deviation of the Bollinger Bands is. Now, currently, that's coming in above there around 59,600 or so, which just so happens to be right around the wick lows of the range where we saw price lose those particular higher volume wick lows. Now, if Bitcoin can recover above there, you can see that the lower first standard deviation is right above the October monthly at 61,350. So again, it's all lining up with the criteria that would need to be met. I would need to see Bitcoin recover above 61,350 to see it get a fair shot at 65K. You start seeing Bitcoin close back above 65K, 67 is in the cards. And if it starts to close above there, this is likely going to rip to the upside. Now, there's a few other things to note that I did mention yesterday as well in the recorded video, which was a little bit longer, and my apologies, but we had a monthly and a quarterly close, plus a big breakdown of a support, or it was threatening to break down, and it had not yet broken down when I recorded that. But we were talking about all of these scenarios to the downside potentially. Now, back to the upside, though, this would actually paint a very, very bullish picture very quickly back above $67,000 as it currently stands. More constructive price action, though, would be come down, maybe dip a little bit lower, maybe come down a little bit further. Where's the next big area of interest if the meme pullback isn't going to be it, and or if Bitcoin jumps back up into this monthly zone and finds it as resistance? Well, if Bitcoin were to move further down, we have primary supports down below, that being the weekly. So if it just continues down on this daily expansion to the downside, you can see BBWP, which is the measuring volatility, basically. This is 61/40. So this is well and truly underway. So the next big area to look would be the September of 2021 weekly swing high coming in at $53,000. That would be the first area to look. Now, you'll note that this is from September of 2021. And what did we see Bitcoin do right at this weekly swing high area? Well, it rejected that area back in February. And we see directly below there, this is the August and December of 2021 weekly closing highs. So these were highs that were set on a close, not just a swing, but a close. And you can see that Bitcoin found this area as support. So this is the next logical support resistance level to look for. And in this case, we quite honestly, if we see the daily close below 58.8, and subsequently drop this wick low around 56,500, and not begin to rise and at minimum retest and then regain 61,350, well, then we're likely looking down to this area as the next big zone. And I do think that is the biggest level of interest as it currently stands. It certainly is for me. That does not rule out the possibility that Bitcoin could pop right back up. Hell, it could even do it before close today. Who knows? Maybe the FOMC meeting is going to, trigger investors' confidence. My personal opinions on the FOMC is I don't think they're going to move on rates, but you know, the Fed doesn't care what I think. It doesn't look likely. Inflation's still running pretty hot. And as much as they try to stuff that down by fixing the numbers or cooking the books, it's still running hot. There's not much that can be done with that. And then you've got the whole nuclear power stuff that's going on. So all kinds of interesting things that are occurring in the world. Doesn't really matter which side of the aisle you fall on those things. They do have an effect on Fed policy and decisions. And if you've seen any of my videos and you note the main screen there, that particular character is a bit rioter by Viola Miscode. And that piece is called Fuck the Fed by Bitcoin Free Ross. And so there's my feelings on the Fed. So we'll see what happens today. If it does recover back up here above 58.8, that would actually be fairly bullish, and it would be a nice buyback, but Bitcoin would still have work to do, right? It would still need to get back above, the 61,350 at minimum to go test up to $65,000 or so. If it began to fail anywhere below $65,000, then you're probably looking at this coming back down, playing around with these supports, maybe even lower over time. And I'm going to show you why on a few different charts here. Then I'm going to show you why you're probably looking at a very good opportunity longer term. And we are going to talk about relative time frames here as well. But just be aware that $53,000 to $50,000 is now in the cards, right? That is on the board. That does not mean that it's destined to get hit, right? But it is on the board. All right. So now that we have that well and clear, I want to show you the 2-day, which is closing today. This is what I wanted to point out. All right, so one last thing on the daily here, and we're going to keep jumping around and revisiting this stuff. We've got a lot of stuff to cover, plus I'm going to buy some time to see what the Fed's doing. Maybe they have the rate decision out already. No, it's not updated here yet. But anyway, one of the big things that I pointed out, and that some of you may have rightfully called me out on, is I had mentioned this bull flag, and many people are looking at this as a bull flag. It may even play out in a similar manner to a bull flag, but it is not, in my personal opinion, a valid bull flag. At minimum, we would like to see divergence building on the daily. And you might be saying, well, there is divergence, Landy. I can see that this area, that's BBWP. You can see it's increasing quite heavily here. So this is a move in progress still. The only way to blunt that, of course, would be back above the last lower high, quite honestly. But, this low over here is going to create divergence all the way through, right? As long as Bitcoin is trading above this low from February 23rd, that was the Friday, February 23rd, which just so happens to be at around $50,000, right? So, yes, there is bullish divergence that is considered historical bullish divergence, or why is my brain failing me right now? A hidden bull div. So we have seen it, it's been populating from that particular low this entire range. But what we are not seeing is bullish divergence within this current structure. And you want to see in trend bullish divergence occur. So that means that we have a downtrend, and you want to see lower lows, and then you want to see some higher lows starting to form on RSI. It doesn't have to, but that is what you want to see. So in my personal opinion, this is not what I would consider a valid bull flag. This is looking more and more like it's going to become a reaccumulation structure, and a longer form one at that, which I think is all opportunity. I'm going to show you why in just a moment here, but I did want to call out that the momentum pivot is at 61,150, so a little bit below that monthly up there for the daily here. This is a regular Stoke, by the way. This is not a Stoke RSI. So Stoke RSI measures the velocity or the speed of the RSI oscillator. And yes, it is in a charted format. It's not an oscillator format, but the oscillator for that would be your Stoke RSI. This is a regular Stoke. This is running a 6.3, 14, 255 look back. Now, this is measuring close over close price momentum. And it is down, of course, because we have lower low closes in this case. So that pivot, you know, it's quite a fair bit above price right now. We also see we're starting to print some bigger red bars on the DMI here. ADX is strengthening, which is just your trend strength. So, you know, this is also just now entering the bearish control zone. Could it turn? Yeah, but it's got to get above 61,350 at minimum for me to start looking for the potential for things to turn around from here. Now, when looking at the 2-day, which is going to close today, I want you to note that we are starting to see more aggressive expansion to the downside as well. So any closes below the lower second standard deviation, which is coming in at 59,500 to 600. It's kind of oscillating around as price moves. That also loses that monthly quarterly by the end of today, which is coming in at that 58.8, will initiate further more aggressive expansion to the downside. And I want you to note that the lower first is currently positioned right now at around 62,800. This is going to drop pretty hard, especially if Bitcoin closes below the lower second. Where would I predict that this is likely to head? It's probably going to be right there at that October at 61,350. So again, we'll follow up with this on Friday's live stream, but that is the most likely area that is going to update. So we are seeing expansion into support. Support is breaking down. If it does break down without recovering and getting back above 61,350, which is where that lower first is likely going to end up at close today, then we're looking at minimum continuation if it fails to push back above those monthlies, right? And then, of course, you can see from the 2-day, it wouldn't take a lot to come down here and hit at minimum $53,000. It could also pull up short. You get get a lot of bids in there front running that particular weekly support area. And of course, you have those 2-day candles from this year over there as well. So 2-day, let's cover the 3-day real quick. What do you see? You see the same thing. Now, the 3-day is not closing with today's candle. It's closing with tomorrow's candle. So at the end of today, which is Wednesday, you'll see on Thursday's candle close, you'll also see the 3-day closure. Bitcoin is getting expansion as it's currently threatening to get further aggressive expansion to the downside below the lower second standard deviation. Of course, the additional criteria is a close below 58.8. Next big target on expansion is going to be $53,000 to $50,000. Okay. Want to be very, very clear about that. And it's telling us on the 3-day, yes, red DMI. But one of the things I want you to note here that we are getting, even though we're getting expansion, you can see that trend is going into more of a consolidation period. Why? We're going to see that coming up here in just a moment. Now, the pivot for that is 60,181. Would turn this momentum pivot back up. So, a little bit more kind than the 2-day. The 4-day, you can see this is the lower first standard deviation. And you're going to see something very interesting occurring here. 4-day is not going to be closing with today's 2-day candle. So this is going to be closing at the end of the week, on the weekend. So I believe it's going to close on Friday's candle, right? Yeah. It's going to close with Friday's candle, I believe. So we can see that if Bitcoin does lose the lower first standard deviation here at around $58,000, to be fair, it's about 58,200. Bitcoin's moving up towards it. It's trying to push into that $58,000 region. Or no, it's actually above it. My apologies. That's actually price, which is trying to make a run back for the monthly here, which again, if it closes back in, the meme pullback is on the table above 61,350. Now, If it does close below the lower first, though, in the next 4-day closure, then we're looking at the lower second standard deviation as being a very viable target to the downside. In this case, where is it coming in? Right there at those weeklies at around $50,000 to $53,000. It's right there at that weekly from August of 2021 at 51,800 though, as it currently stands. So keep that in mind. Also, this is a beautiful expansion up, mean reversion back to the lower first and even the lower second, as long as it's not breaking structure, meaning losing this last higher low structure on a swing. It's looking fine. Yes, it is a 4-day downtrend. It is a corrective move. I don't have any problems with this. I don't think you should either. This is a welcome and needed pullback, and I'm going to talk about why I think if it does pull back further, as we look at the 5-day here, we're in for a longer form correction, but probably a much higher upside price for the bull market and a much longer form bull market. Whereas if Bitcoin does hold 58.8, recover 61,350, which is where it's essentially where the 5-day basis band is currently, and then takes off and takes out the highs and begins to really march on with this run, I would be in favor of a shortened bull market, a very violent move to the downside after that, and then a longer form reaccumulation, and then much later another move back up. But if Bitcoin goes into a reaccumulation first, nice sideways reaccumulation, breaks down below, goes and tests 50 to 53, or even messes around in between, then I'd be looking at a longer form bull market that could extend into 2025. Currently, that is not my thought process until I see closes below 58.8 and then evaluate from there on any failures at 61,350. Now, that's where the 5-day basis band is. I want you to note that the 5-day lower first standard deviation, which is a wonderful basing point to come back to after a beautiful expansion to the upside. You can see it's starting to get compression. You're getting the curling over of the upper standard deviations and the swooping up of the lower standard deviations. That's just lining up right there at, again, right in those weeklies, right in between 50,000 and 53. Right on that August of 2021 weekly there at 51,800. So we have another point of confluence in that area. Now let's look at the weekly again real quick here. And I want you to note that the weekly, if the Bollinger Bands ever load here, the basis is just below price. So we're looking, because Bitcoin has moved down a bit here, we're seeing a little bit of a movement down. So it's at 55,500. That's fair game. It's still a little bit more than the meme pullback, but again, we typically see bounces around the basis on longer term timeframes like the weekly. So this would be a good area to look, and front running that area at around 56,500, still within my deviation of the meme pullback number between 20 and 22% there, where we are currently sitting at around 23, almost 24%. So this weekly, though, you can see that only if Bitcoin closes back above the upper first standard deviation. So this is the way that deviations work. If you see a closure below, so we saw the upper standard deviation swoop above price action as it was closing below, then that makes the basis band the primary volatility target to the downside, and then of course the upper first standard deviation, the primary volatility target to the upside. Above there, which is right around $67,000, which is the last lower high, then we can start entertaining moves up to the upper second, but that's only on a weekly close in this case. You can start front running that on a daily if it does meet all the criteria or conditions to move up. Of course, it would still have to get above $69,000 and $70,000, take out the actual high at 73,835, and then we can start targeting somewhere around that upper second, which is currently coming in just shy of $78,000, which is one of our primary upside targets, around 75 to 78 as a zone above the current all-time high. Now, one of the things that you do need to understand is we can see wicks below on weeklies, and then we're starting to look towards the support and resistance levels, right? You can even see deviations below the basis on weeklies. But if we were to see a closure below there that then goes and loses that weekly, we're looking down to the next big area, which is a monthly zone, and probably that'd be a really, really harsh correction, shake out a lot of people, and honestly, I'd love to see it, but this would be a very, 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 very aggressive downside target. We still have not seen a close on the daily below 58.8. So that quarterly monthly is still being messed around with, and Bitcoin's trying to push up towards it right now as we're speaking. So 47.7 to 45.5 would be in the cards. By that point, you're going to see the weekly lower first standard deviation right in that area. So that is some of the major targets to the downside. Again, this is all conditional. Bitcoin needs to lose 58.8 on a daily and higher term time frame closure, which today, if it loses it, it would be on a daily and 2-day, right? And we would need to see follow through now down to, we would need to see a failure on any retest from this current move down at around 61,350. If it does try to move up and push above there and fail, then we're looking for a further move down. So this is the primary resistance now after losing it. So that's the overhead resistance. When doing a bit of volume analysis, which we can jump into in just a moment, we'll see that some of the higher volume candles in the range are going to be primary areas of resistance overhead, and how they kind of line up with the actual wicks and closes. So we'll investigate that in just a moment. But I want to bring you back to something very, very important that I talked about prior to the halving and then just after the halving. Now, Charles Edwards from Caprioli Investments, Charles Caprioli, if you like, as many people call him, has the production cost indicator. He has not updated that. So what he has done, though, is he released his newsletter, and he also posted it to x.com. Now, prior to the halving, the production cost, or the lowest price to produce a Bitcoin, was at around $30,000. That actually jumped even more than 100%, because when you halve by 50%, your cost jumps by 100%. So it was even more than $60,000. And in fact, the electrical cost right after the halving jumped all the way up to around $77,000. And that is just the electrical cost. That is not production cost or the miner price. Production cost is around $128,000, which just so happens to be, these are all lining up with our upside targets, by the way, on the longer term timeframes. $178,000 basically, $115,000 to $130,000 above $100,000 if we do see that breached anytime in the near future. You can see that 114 would be the miner price. The actual production cost somewhere around $130,000, and then the electrical cost somewhere around 77. I will say that that is likely to drop, and has dropped a little bit from what I know on my own personal mining rig side of things. And when we come over to mempool, you can see that the last actual adjustment was a 1.99%. So basically about a 2% difficulty adjustment up. And the reason why we were seeing difficulty adjust up post halving, which usually we see it move down a little bit, but we had the rune rage going on the network there right around the halving, and then for quite a few blocks after the halving. It lasted about a week. We are seeing spots of very high fees still every once in a while, but it is lessened to the point of not really being relevant. Actually, quite a bit quicker than I thought it would be. I was estimating about 2 weeks, but really it kind of normalized after about 7 to 10 days. And we're starting to see like normal fees during daily trading session, and then post market here in the US, fees have been fairly reasonable, outside of a few spots of very high fees every once in a while, which is typically people with, doing runes or etching something, or inscribing something like a collection. And it really hasn't even been that bad. So what you do see now, though, is that the next predicted difficulty adjustment is going to be about 3% down. So this is going to actually drop costs a little bit. So in this case, it's about, what do miners do in this area? And I've heard a lot of like, hey, miners are going to probably capitulate here and they're the ones selling. And I'm going to push back against that a little bit because there's, when people say this, they often don't provide any data to back it up because they are just giving an uninformed opinion as fact. And in this case, I can tell you that as a person who mines Bitcoin, we are not selling. In fact, some of us are even boosting our reserves a little bit. So when we did sell, it was right around the very first big peak, and then coming into another spot of selling at around the breach of the all-time high. But that's when you saw some reserves moving. But I want to point out this chart here. This is called the miners index, position index, rather, the MPI. You can find this for free over on cryptoquant.com. I have upgraded this particular account that I'm on to get a little bit more granular data, but you can find just about any chart is just limited to the daily. If you go here, and we don't often talk fundamentals, but I've found that many people are very interested in it. So we are going to start incorporating this a little bit more. I don't trade based on fundamentals, by the way. I trade based on price charts. So that is where I base my trades. This is more of understanding some of the underlying metrics and understanding, the what is more likely to happen even when your trades are hitting perfectly. What is more likely to happen with some of the longer term macro structure due to the underlying fundamentals of what's happening in the miner and Bitcoin network side of things. So the miner position index is the ratio of miner outflows in US dollars relative to its 1 year moving average of total miner outflows. So you have the total miner outflow for the year. That's converted to a moving average and is updated every day in this case, right? So you have that moving average, and you have the total outflows for the year. And in this case, this is what is your total outflow of this particular of Bitcoin from miners over the course of that year in a charted format where they give you a 0 read, a -1, and it's actually a little bit different than that. Because they did update this. Higher value shows that miners are sending more coins than usual, which indicates possible selling, and a drop if miners send some portion of their reserve, which we did actually. You can actually see that my pool did right around that first peak, and this was coming in just shy of the prior all-time high. This was around $69,000 roughly, and then you saw quite a bit of reserve moving, and then you see this trending down because miners are not selling. In fact, it's heading more towards the green line. You saw that miners were heavily positioned and basically moving reserve assets at around that monthly at $47,000. So that was that big monthly that we pointed out below those weeklies at 53 on the wick and 50 and 51.8 respectively. And the closes there. Now, we saw massive moves down, and this actually led to that uptrending structure shifting to a downtrending structure before, going into that sideways accumulation around $47,000, coming back down and spiking the monthly directly around 38.5. That was your back test of that 38.5 monthly, which was a very important monthly at the time, and Bitcoin literally hit it to the dollar. And then what happened as as Bitcoin moved up, you see that miner outflow was moving down. The next big spot where it moved up was, of course, we could full screen this, was, of course, right prior to the prior all-time high, which is normal. Now we see it on the low end, and we're starting to see some outflows in this area, but this is nothing abnormal. This is actually the area that you want to see things kind of some outflows. We get a move down. We then get some reaccumulation. some reserve buffer as well. So you probably have some miners that are selling to cover coming into the last month of the quarterly, right? So this is normal stuff. We have books to keep as well. And of course, you see that reflected in price along with pressure down from ETFs selling off a little bit. In fact, we can go to the community scripts here. We can go to my bookmarks, and you can he changed the title to this. So one of the most popular creators on here is this FFGGGGG, and he's changed the title of this particular chart set to something that I probably can't say without getting banned on YouTube at minimum. But he's got a whole set of charts here. One of the big things that I want to point out, I believe it's in this particular set of charts. Hold on. Let me scroll through real quick here. Make sure that I got this right. No, this is not. We're not seeing the one that I wanted. I'm going to have to go through and like set up the charts the way that I would like here soon so that I can illustrate some of the fundamental stuff a little bit better for you. But essentially, the main point that I wanted to kind of get to there was, for the miners themselves, are they selling right now? Are they the reason that Bitcoin is dropping? No, in fact, they are not. More likely, we're getting quite a bit of pressure down from some of the ETF side of things, and then we had a lot of unreasonable longs within this range as well that we can take a look at. I believe Ki Young Ju, who is I think the CEO, he is the CEO of CryptoQuant.com. And I wanted to point out this chart. So we were looking at this during the correction back in at around that $47,000, right at that monthly. And this is the IFP. So it's probably better if I read this to you. The Inter-Exchange Flow Pulse measures the Bitcoin flows between spot and derivative exchanges using CryptoQuant's Bitcoin exchange flows data. This flow data shows market sentiment, a growing, declining amount of Bitcoin flowing to or from derivative exchanges coincides with bull and bear runs. So basically you have this moving average here, and it's the IFP. And when it gets below the moving average, you see it print red. That's usually, we're in a bearish period. And when it's above, we're in a fairly bullish period. I want you to note that this is not red. And even when it was red, I had called this out as a false signal at the time, likely to come down, get a nice higher low in that particular IFP data, work its way back above the 90-day moving average, and then we're good to go. And that's exactly what we saw. We don't even see this turning red right now. So that's one of the big things. Coinbase Prime inflows. You do see quite a bit of inflows, address inflow for USD. Let's see, there's one chart that I'm looking for specifically, and it's called the crystal ball bands, and I don't see it here. We have something similar, the price prediction based on realized cap. This is, it's a set of bands that you can see has caught basically the ceiling and the floor price for Bitcoin. Yes, you get deviations down below, especially early in Bitcoin's history, and significant deviations to the upside. And the deviations to the upside of this particular set of bands or realized cap is something that you're going to see all the way through Bitcoin's history. And then, slight deviation back here in 2015. We had the nice double bottom, 2015 to 2016, massive bull run into 2017. Of course, deviations above. This is log scale, so these are quite significant deviations. Even the ones below weren't actually too bad here. The floor price was 3.4K. 3.4K was tagged. And it moved down with price there. So even though it looks like a deviation, it wasn't too much. It did get a little bit below it. We saw it tagged again in 2020. We all know what that was. And then we saw the upper ceiling price just getting tagged repeatedly throughout 2021. Nice daily Wyckoff reaccumulation, hit the spring, New highs, did not even come close to that ceiling price, and then came all the way back down to the floor price, which marked the bottom, and that was right around $15,500. You can see that this is kind of a no man's land. I believe I can customize one of these, so I might throw on like a midline for this and import it to my own chart. You'll have to give me some time to do that. We see ceiling price now is moving up day over day. At one point, it was like around the $80,000 region the last time that we looked at this, and now it's currently at 110. Floor price is around 21. I do not. I'm the floor price is going to increase massively in the coming days and weeks, so I'm not that concerned about that particular read. We have the supply in profit market bands, so it's another interesting set here. Now, you see where price is. You see that we have supply and profit in blue. So that's the blue here. We see bottom price discoveries down here. Liquidity accumulation. We get a threshold of optimism and pessimism. That's kind of the midline there, the dotted one. We get psychological inflection lines, which it is currently below at this particular point for supply and profit. And then we have the overheated zone, which Bitcoin loves to tag in this case. You know, what you got to understand is it can get significantly above the overheated zone and it can remain above there, and then this adjusts up. But one of the things that I did want to kind of call out here is we're getting to that threshold of optimism, pessimism right now. It's not far away for supply and profit. And from a fundamental and psychological point of view, one of the reasons why that's important is, well, when you get a really bearish sentiment shift in the markets in the context of a bull market, just like when you get a really bullish sentiment shift in the context of a bear market, you're likely to see, in this case, we're likely to see the bottom form for this particular move, and then up and away, leaving many behind to come by the top when we're ready to sell again. So what I'm trying to point out here is this is all opportunity. I can go through these charts for hours and hours and hours and talk to you about this stuff, but more importantly, it's just understanding that I'm probably going to lose my voice during this stream, but it's understanding that this pullback is healthy. It's needed. It's a corrective phase. And oh, hey, what is Bitcoin doing here? Bitcoin's regaining some of the areas we talked about. So is the meme pullback in play? Yes, it is in play. As I'd mentioned, daily closes below 58.8. If we see a swing down below, nice strong close above, it still needs to meet additional criteria. This is your zone to watch. 61,350 to wherever the lower first on the daily ends up. If that area is recovered, 61,350, and especially the lower first, which is, unless Bitcoin turns this into a green candle, which would be pretty awesome and bullish, then, and only then, what we're likely to see is the lower first head right into 61,350. And then we start looking at this as, an area of interest if it can regain that to start looking up to the basis, which is going to move down currently at, $64,000. That's probably going to move down somewhere around this, between this low over here at 63,800, which by the way was right around where we saw the high and then the rejection and move down from the close open here around 63,800, right? Was this low over here. Now, we're likely going to see the basis somewhere between there and that 62,260 area on the wick low of that particular move. Of course, just above the 61,350, which is my primary criteria for starting to entertain moves up further. You do have the close open over here at around $62,000, between $62,000 and $62,350, up to that 63,800. So just be aware of the order of operations here. And even within this zone, you can see the daily order block over here. You can take wick to wick and then highlight the close open here. So if you want to, if you want to evaluate if this closes back above 58.8 today, if you want to evaluate like zones of interest that are more local, outside of the longer term support resistance zones, you can use order blocks like this. We have inside bars here. This was your triangle breakout to the upside. I'm not a pattern trader, but we can call it out when there's a clear structure there, especially with the inside bars here. Nice high volume candle as well there. But what we want to take a look at here is we can highlight this. I know I do order blocks differently than others, but I have also have a system for deconstructing the volume for you guys on the actual books, so you can kind of see how that 12-hour plays out. And of course, when this was broken down on lower term timeframes, by the way, even on like a 15-minute, you can see that it acted as primary resistance, right? This big order block zone. So the primary body of that 12 and daily candle, 12-hour and daily candle, broke down, started to find it as resistance, broke down to the wicks, found those as resistance, tried to pop back up, failed, and then began its move to the downside here. This is a nice move up as it stands right now, above 58.8. It needs to sustain this if it's going to try to close in here on the daily. It can deviate outside of that monthly and quarterly on the daily here, as long as it's holding this wick low. Now, one of the other things that that we can look at here is some moving averages, because there are some moving averages that are pretty important to note here. We can turn them on and really make a mess of the charts here, and that's going to take a moment to update apparently. We can see that Bitcoin's trading below the 100 EMA. We can turn off the Bollinger Bands for now, and we can see that on the Landy Bands indicator here, we have a set of EMAs. Thank you, Caretaker, for allowing me to use the BBWP and the moving average indicator as a base for my free indicator that you can find in the video link in the description. Also, it is on, it's linked in my X profile there. So the 200 on the daily is all the way down there. Guess what? $52,000 falls right in that weekly zone at the $50,000 to $53,000 zone of interest if Bitcoin does close dailies below and fail that meme pullback. And I will give it some room. We can still call it, hey, guess what, Bobby Torque, we can still call it a meme. It's within deviation. It's within deviation area, and I have been saying $56,000 to $58,000. If it comes back in, watch it. But we need to see a low set, right? And if it does put in a low here, what does it need to take out? It needs to take out the $50,000 or $67,000, which is all the way up here at 50 SMA. So just understand that it would have a lot harder time from here, but it would not be out of the question. Maybe it could start forming some divergence. You see that monthly, quarterly, not weekly, is on the 12-hour acting as primary resistance right now. I want you to note that we do have a meme, though. We have a meme on the charts here, and this is Credit Bobby. Some of you might know him from Discord. But credit Bobby for the 369 because it is a hilariously accurate moving average. Now, this is an EMA. I believe mine is set to an EMA. But he was messing around and found that it was actually like super accurate. So if you want a meme for the 12-hour, if the 200s form as primary resistance and we get the 9 and 21 underneath, we're going to get the full trend indicator flashing. And then this 369 area becomes pretty relevant. That's right there at 53. Now, of course, if Bitcoin heads up and closes the next 12-hour here, you're going to see this continue to tick up into the local range. But this 12-hour is also pretty relevant here because we are likely to see a momentum shift if we do see a nice green candle coming into the close of today, but we need to see follow through. We need to see the next 12-hour candle follow through above the momentum pivot for Stoke. In this case, any closes on the next 12-hour candle, which will get an initial cross up. Now, that's not follow through. That's the first cross. That's the K over the D read. You might even see the D read starting to poke up a little bit, but that's not a fully confirmed signal. So 57 270 to 300 or so. That is going to be the primary area to watch for the next 12-hour closure. If we see a 12-hour close above that pivot number, we will see an initial cross up on the. It's indicating that it's already crossed up. This is not a fully confirmed signal. Even if it does this by the end of today, you want to see the next 12-hour candle follow through above the momentum pivot update. And again, for those of you that are like, hey, you have a really fancy Stoke there. Where'd you get that? Well, I don't have any affiliation with Crown. I don't make any money for mentioning this particular set of indicators, but I'm a big fan of Crown's developers over there at app.crowntrading.net. And this was by KVDB, but you don't need an indicator like this. I like it because it's got a bunch of other stuff built into it, like ADX and DMI and stuff that's not really going to be relevant for most of you listening. If you want to get a free indicator that has pivots, there's plenty of them. Probably the most popular one that I've seen is this BA reverse Stoke panel. And this is the same thing. Basically, it has the momentum pivot. It also has overbought and oversold zones. So moving out of the oversold zone would be on any close above 58,350. It's currently above there. So next closure, it would start moving out of the oversold zone. Likely, we would see the initial cross maybe result in a fully confirmed cross to the upside. That still does not rule out downside, though. And one of the main things that I want to point out about downside is you can see it's already below some of the major moving averages. It can deviate them. If it starts closing the 9 and 21 under there, though, it's probably going to continue down. I thought I turned that off. I did. We're getting a little bit of lag in TradingView here. All right. What I want you to note is that we have the initial expansion of the Bollinger Bands down. Any kind of rejection around the lower first and that monthly at 61,350 going to be pretty damning, right? Because that would be your trend. In this case, your trend resistance, or when it's to the upside, would be trend support. But this would be your primary resistance at that lower first standard deviation. That's currently coming in below the 61,350. So if that could be recovered, then there's a chance to go run the basis band on the 12-hour. And that's sitting around 63,500 currently, likely going to move significantly down at the end of today unless Bitcoin just rocket ships its way right back up there in between now and close. But in this case, this is where this area becomes very, very, very important around the around that 58.8 to 61,350 to the top side there. So primary zone of resistance overhead now. Okay, now what we typically see is even if Bitcoin goes sideways and plays around with this support, we typically see the lower second standard deviation. Whenever we see price going sideways, it will swoop past price and continue down. Okay, so that's what we saw here. Primary expansion to the downside on the 12-hour back here. It comes up, finds the lower first as resistance, and then you get, the lower second continuing down. And what does price do? It rides that lower first standard deviation down while tagging the lower second as it passed price. So you get the initial expansion past it, and then the residual expansion of the bands to the downside as Bitcoin was in a 12-hour expansion down, right? And it used that lower first as the resistance and the lower second as it continued to move down as support. Even after putting in that beautiful low, we got the beautiful spike back to run that low before the failure at 67K, which just so happened to be what? The upper second standard deviation. This caused a compression because we went from expansion to compression and then re-expansion to the downside. So just be aware of the dynamic that's occurring within volatility as we're approaching and retesting overhead resistances. And, if the meme pullback holds 20 to 20, well, we're just going to have to extend it. 20 to 23.5%, right? What are we at on that wick? Yeah, 23.5%. Which is, to be fair, it's only like a 1% over. That's one of the main reasons why I had mentioned, meme pullback for me in particular is $56,000 to $58,000. We have fulfilled that. There is a few other things to note here on some of the longer term timeframes when it comes to a few of few of the areas of interest as it relates to moving averages that I showed yesterday. We have the 9 EMA on the weekly here, and then we'll look at the monthly. Was breached below, support failed. Where'd it go? Went down to test the 21. The 21 and 20 are generally in the same area. When you start to see price mean revert, the 21 is above the 20 right now, and you do want to see your EMAs leading your MAs. That may not remain true, but even if they get a slight cross down or cross over each other, I'm not too concerned about it. You can see that the 55 is directly in line with the lower first standard deviation, and that will continue up. I'm really not entertaining this 47 to 45, even if we see a massive failure down below the basis and 21 EMA. Primary is going to be 50 to 53. Meme pullback is still in play right now. But when looking at the monthly, I do want you to note that the 9 EMA is directly in line with the upper first standard deviation on the monthly, and that's coming in at 50,800 or so. So again, in that $50,000 to $53,000. Now, a lot of people like faster moving averages. Some people use an 8. An 8 is right in between, just underneath of the 53,000 at 52,500. That is an area of significance. And then the other popular one is going to be, well, the one that just got tagged, and that is the 5-period EMA. And on the monthly, that has now been fulfilled. If we look at a 2-month on one of those faster ones, though, I want you to note that the faster EMA, the 5 is right there at $52,000 on the 2-month. And the 2-month is just a shit ugly candle. But just because it's a really ugly candle that failed to even close on the 2-month, we have not even seen a closure on higher highs yet. We have seen wick higher highs, but not closing higher highs. We can turn off the bands here for just a moment. And I want you to observe just how ugly this 2-month closure is, because that's ugly and typically very toppy looking, in many cases, implying much further downside to primary supports, at weeklies and monthlies. But, with Bitcoin kind of doing the dance of death on the edge of that quarterly, the primary support for the momentum pivot being at like 28,500, that wouldn't be bearish at all, even if it did head down to those areas. I do want to note that we are seeing a bit of bearish divergence threatening to develop here. One of the main reasons why is because we would get any kind of swing high in the next 2-month candle, which of course there's 2 months to go. And we will see a quarterly close before then anyway. But any kind of a close basically below $59,000 and especially below 58.8 would put in a swing high. The only way that we would see a closing high put in from here in particular would be a move down to 42,300. And quite honestly, I'm not in favor of that deep of a move, even if we saw like just horrific moves down for Bitcoin. It's post-halving. It's very expensive to produce Bitcoin. You'd probably see a lot of miner consolidation if something happened like that. A lot of miners closing, bigger miners buying them. I'm not seeing that, and I'm not in favor of entertaining any kind of a move like that. You can see the quarterly is pretty ugly too, but the quarterly did get a closing higher high and it got a new wick high. So, this is all normal correction stuff. So one of the big things is like everybody is just super, super hyperbolic about it right now. And it's kind of asinine if you ask me. We needed a bigger correction. It's still within the deviation of the meme pullback. I'll give you guys that one. So you can hang your hat on that if this holds. I do want you to note on the quarterly that, right around $50,000 at those weeklies. So we can turn this back on just so I can illustrate this point again for primary supports to the downside. Now, you will see it's below my lines, but the actual weeklies are at 50,851.8 on the close, and then 53. And you'll see that I've been saying what 50,000 to 53,000 just about the entire time. Why? Because that's one of the main areas on the quarterly. That is the upper first standard deviation. Also happens to be one of the faster moving averages there, your 5-period EMA. So essentially, what does all of this mean? If you want my opinion, I don't trade based off opinion. I trade based off the chart, and so should you. If you want my opinion is that if Bitcoin does initiate a move further down than this, where it's currently flirting with trying to lock in the meme pullback, and if it is going to move down to 50 to 53, we are looking at a longer form bull market. And this would be a much needed correction. So I will draw your attention back to that quarterly real quick. We'll go to the index chart. And one of the big things that I want to point out here on the index chart is momentum. So Stoke momentum on the quarterly is pointed up. Okay. If I can unsquish this Stoke. That is at $34,000 currently. So that momentum pivot pretty far away. Combine that with the actual cost to produce Bitcoin. That's literally half of, that's half of the cost. That's the prior before having baseline electrical cost for production of Bitcoin. So that does not account for anything else. And now that is doubled and more. As he has put it, it's about $77,000. I do believe it's a little bit lower than that. I think it's in range, at the top of the range. If he would update his indicator, we'd get a better look at that. I will dig through some of the crypto quant stuff so that we can, I'll probably make my own chart on crypto quant for you guys, showing what the actual production cost is. Versus like the lowest that it could possibly be in ideal situations without considering any other monetary factors. But more importantly, on the 2-month, we're looking at momentum pivot being at 28,500. On the monthly, we see that it is pointed down. So we see this pivot for Stoke on the monthly is at 70,521. Here's what you need to understand about that. That is more likely because we see momentum shifted to the upside. We see an uptrend. And when looking at the monthly, when just looking at trend alone, because there's 4 major components to trading and understanding price. Your first is going to be, there's only 3 take about equal priority because they create the 4th. But you have trend. So you have, we'll throw on a swing chart indicator here. We have trend, so we're in an uptrend, right? So primary is going to be trend. Next is support and resistance. So you can just visually, I don't have the SR levels, but that's what, I continue to reference on the longer term timeframes. So you have trend, support and resistance, and volatility. And this is something that almost everyone in these markets misses, and that's the volatility piece. Because many don't understand that you need to incorporate that to understand something that trend, support, and resistance and volatility create, and that is momentum. So just looking at momentum isn't going to be good enough if you don't understand the underlying factors, if you don't understand what trend things are in. This is an uptrend. The most recent higher low is actually technically a little bit of a lower low on divergence, right? But in this case, the most recent low is $24,900, $25,000, right? It was a higher low on a wick because the wick prior was around 24,700, 24,900 lower low close, but this is the most recent low. What is more likely to happen on the monthly? Well, what's more likely to happen from here is a higher low. So that is what we would be looking for. Closing below the upper second at $66,000 does give it the opportunity to go test that upper first, which again we've talked about is right at that August weekly at 50,800, or is that the December weekly? I don't even remember now. That would be the August weekly. December weekly. It's the December weekly. So, during the course of this month, could that area be an area that gets hit? Well, yes, it's a primary area of interest on any breakdowns below that March quarterly and monthly. So, suffice to say, if things were to break down there, I think that Bitcoin goes into a little bit more of a long form reaccumulation structure. We would still have to call out targets to the downside further into the monthlies there at 47 to 45.5. But I think this is all opportunity, especially when you consider that it's very rare in Bitcoin's history that you get the opportunity to buy Bitcoin cheaper than it is to produce it. So, not financial advice. Do your own research. Everything can go to zero. Literally everything. Do I think that is likely with Bitcoin? Absolutely not, obviously. But yeah, I think that we have all opportunity ahead on these particular pushes down. So, all right, let's check on something a little fun, because I know many of you. Oh my God, everyone left. Did everyone really leave? No, my whole interface just reset. It literally say everything could go to zero, and everything in my interface absolutely nukes. Well, that's fun. Am I even live anymore? What the hell happened? Anybody out there? Can you let me know if I'm still live here? And then we're going to do something fun if I am still live. As many of you are from the ordinals community, we're going to go see how ordinals are holding up. I know there's a Merlin unlock as well pretty soon here. Let me check chat. It says I'm connected on this side. Okay, it says, okay. I see chat going. I see I'm still here. Landy is lost in cyberspace. Fun. But I don't know if you guys can hear me. Bobby's saying no. I don't know what he's referring to. Zero with haste. Oh, you guys are running behind still. Yes, the PMB, the Puppet Maxi Biz ethos, 0. All right. Yeah, whenever you guys catch up, let me know if I'm actually still going. You're obviously responding to stuff prior in the stream here. So I'm not going to reset anything until I until I see some kind of response. It says that I'm still live and there's people still watching when I go and log in to look at the stream. But I don't know if it's lagging so far behind that it's all of a sudden going to end. So I'm just going to banter for a moment until I get some kind of a response. Spin. If you're pretty active in chat right now. If you can hear me, let me know. I think Bobby's there as well. Okay, Spin says no reset so far. Okay. Live, not live. Who cares? Okay, so obviously I'm still live. Okay, cool. I'm here. You sound great. Okay, thank you, Earth Angel. Extreme Grace. That is a long YouTube name. Thank you. I appreciate you helping me with that. We just trade. Bobby says, haha. I'm a little lost on whatever this conversation is. There is quite a bit of talk going on in here. All right, let's go look at the ordinals marketplace real quick here as Bitcoin flirts with $58,000. What's the runestone? 25%. More diamonds. Oh man, diamonds are forever, I hear. It looks like people bought the dip on runestones here and not on Prometheans. That's still getting sold into pretty hard. We've got Rune Whispers still up there, doing all right. We've got Blob. If anybody got blobbed, I hear they're making some moves pretty soon, and they have some deals with other people for rune airdrops. I think they actually partnered with the Prometheans guys for the decentralized drop. We got XO, Rune Pups at 069. Nice. There's PMB. Man. 0028. Jeez. It's a bloodbath. Uh-oh. I'm going to get banned from YouTube for saying the word bloodbath. You know, like the media. Puppets pulled back pretty hard, huh? Pups. Yeah, Pups pulled back hard. But if you were going to chart this, you'd consider this support. You just don't want to see it swing below 0.21, 0.20. That's like kind of a big zone of interest, but don't want to see it pulling back under there and remaining under there for any length of time. Now there is I know that people who staked with Merlin are getting their unlocks, and you know, when people are bearish, they want liquidity. You know, maybe they got underwater, got their position blown out on exchanges. Look at how cheap Sigmas are right now. Holy shit, man. Nice accumulation though. This is a beautiful accumulation. You had the real low come in back here in late April. Last week of April there. Man, that was shit. I missed that opportunity. This is going to probably accumulate for a while. You're going to see most ords are going to accumulate. This is not unique to Sigma or any other ordinal. Most are, you know, the ones that really dropped off the map are all because they did their rune airdrops or claims. So basically they were glorified, you know, tickets for runes. Whereas, you know, if you just have like a stone or a video like Prometheans, which is just a video inscribed on chain, you know, you're just punching a ticket to get runes at that point. Outside of that, there's not really a lot of value until they announce like, oh, we're going to do another coin, or there's a partnership, or, you know, something like that. I'm not, you know, that's those types of projects are going to come and go very quickly, especially from the ordinal side of things. You know, it remains to be seen if the rune side of things goes anywhere. But then you've got, you know, actual PFPs. You got the Rune Whispers. You got the Sigmas. Obviously, that's my X profile picture because I'm supposed to get boosted or something for that, I believe. And they're actually really cool. So I'm going to shill because I know some of you are here. And I wanted a Venom. So I'm not going to purchase one on stream, obviously. And if you front run me and purchase it before I can, just kidding. I forget the they're basically they're animated inscriptions, and they're really cool. And then of course they also have a rune play and some other stuff that they're doing, and they gamified everything. I like these things a lot. I expect them to do well even after a rune drop. You got rune monks down to nothing. Runes AM BBI down to nothing. Again, all of these different things. Now, of course, RISIC or RSIC, a play on ASIC, which is doing quite well because they're moving into the next mining season. They airdropped their runes. This saw a pretty big hit on floor price. But relatively speaking, it is holding up quite well. It is in one of the lower levels that we've seen for it. You know, at one point, this thing was trading up at 0.09, and even significantly higher than that in March and the 0.11, 0.12, 0.13 area, even 0.14, I believe they got up to. So it's, you know, they're moving into a new season. They did the rune drop, but they didn't quite take the hit that everyone else did because they had already prepped everyone from they had already prepped basically the holders that this was going to continue. It was not just going to end at this stage. And I think that any project that's doing that and offers value beyond the initial drops is going to be successful in the longer term. You'll likely see runestones come back, whenever Leo hits his target for dog or whatever and does another drop, you're going to see a big increase and stuff like that. Prometheans, same thing. I'm sure they're going to have something else coming. I don't know if this is supposed to convert into a PFP or something. I've heard a lot of rumors. I don't know anything about it, to be quite honest. But yeah, like I kept 3 of them. I got some airdrops. Blob is just a cool thing. And saying that you got blobbed is also kind of weird and cool, I guess. XO is converting to a PFP, very ink like, but I think they're prepping their audience in the right way. If you had to ask me, Bitcoin Puppets, obviously, Ordinal's gonna Ordinal Maxi. There's probably ones that you guys like Retordinals, and I like those as well. I think they're funny. And listening to the creator talk about like this is not making fun of people who have disabilities, obviously. Mentioning that he has family members that have disabilities. This is about something completely different. Obviously, if you're in this space for the memes, you understand what he was saying. But yeah, there's a lot of projects actually holding up quite a bit better than I thought they would. Even Ordzar Pass took a nice dip, though, by the way. They got some kind of airdrop or unlock happening today. If you did not get in before the snapshot or the claim or something for their boxes, they are not related to the pass. Those boxes are for everyone, and I guess they're going to do some kind of drop or claim based on those. Yeah, you know what? Ord's actually holding up quite a bit better than I thought they would. But what about runes? They had a pretty big dip down, but they bounced back pretty hard. It's dog go to the moon. It dipped down, I think, at one point for a lot of one runestone. You got the 889, 806. They were at around 2,500, 2,700 briefly. So big dip and nice bounce back. You see Bitcoin just pushing right back down, by the way. Just ran and found that resistance. Again, like I said, needs to get back above 58.8 and especially 61,350. Decentralized, does anybody know if there's a chart for runes, like where I can go look at an actual chart? Because they have not. They built this out. They're still building this on Magic Eden, but they haven't really charted much. Risik at around 20 and a half sats or less is, in my opinion, probably a good deal. Yeah, especially under 0.01. Probably a pretty good deal if you're into this. These are super risky shit coins that have no value. The only thing that shit coins on Bitcoin have over any other shit coin is that they're on Bitcoin. That's it. And any shitcoin promising utility, probably, man, Bitcoin Pepe Matrix. I'm glad I picked some of this up on the lows. Holy wow, what the hell happened? That's not even that much volume. That's nothing in terms of volume. Is this super supply limited? No, this is not. I wonder if circulating supply is what's limited on this. That's my bet. Be careful. If you are in this, and I picked some up when it was quite a bit lower. If you're in this particular shitcoin, maybe check the supply dynamics, because 6.94 billion. My bet is there's probably a pre-mine on this and or a wallet or set of wallets that mined like the majority of the supply. And this is super supply restricted because this is at, yeah, well, maybe not. Maybe not. It's only at 0.82 sats. Maybe I'm wrong about that. You guys will have to correct me. I could be completely wrong. But man, that thing is ripping. Like Pepe usually does. And by the way, Pepe, the altcoin, is I picked some of that up on this dip. I might even pick up some more if it dips further. The actual altcoin. Yeah, you know what? Things bouncing back fairly good. Big moves down yesterday. We are seeing some decent volume come in, and especially considering like 1 day volume in the context of this really, really sharp move down below support, and maybe even, staring continuation in the face, seeing, nearly $1 million even on some of these. Obviously, dog is going to be the big dog in the room, but seeing flows like this is actually not as bearish as I would have expected, believe it or not. I know the runes is dead meme is real right now, so that was the same with the ords are dead thing meme before liquidity flowed back in. So I did want to check on this one because I just really haven't had a chance to look outside of this particular live stream, but holding up better than I thought it would, to be quite honest. And sats are pretty low, so we've got some accumulators in the market, and that is a good thing. Let's see how many shorts got wrecked. So on this move up, you can note on OI. Oh man, well, longs, you just wrecked yourselves. Nice move down in OI though on this retrace. We got a bunch of longs right at the top there, got wiped out. And on that move up, you also saw likely a lot of shorts taken on the nose on that retest of resistance. Let's go ahead and take a look at liquidations real quick while we're here. Yeah, so shorts took it, not crazy amount, and then longs taking it on the other side right now. If we move past, this 56,500 area, longs are going to start eating it again. I suspect funding rate is positive still, yeah, and getting quite positive again. So, yep, just keep don't wait for a structure change or anything, guys. Just keep longing, keep knife catching. Please wait for at minimum a lower term time frame trend shift, please. We haven't seen one yet. I know it's nice when it pops up really hard, but this could be a trend shift, could turn into one. But more likely than not, we have a trend break of this downtrend on the 15-minute. But if it takes out the lows again, then it's this is a deviation, bearish divergence, all the nine. Yep, bearish divergence, a little bit longer term. It's not going to populate there, but even the hourly, I bet it would show it. This would be a bit of a higher low to a higher high and a swing and a close higher high if it can maintain the lows. Again, bearish divergence on the other side of it. So technically, I would want to see this swing down for like 55, which is, that is the weekly basis band. So there you go, Bobby. You're welcome. Why Sigmas? The team there is awesome, and the community is cool. I enjoy hanging out. I haven't been able to hang out in Discord with you guys for a while. Let's see. Diamonds are forever. Isn't that a James Bond flick? Yeah, it is. It is. Let's go ahead and look. All right, so. Oh, Bobby wanted me to look at Nat Cats. Oh, poor Nat Cats. Does it have 9 lives in it? Can it keep going? We can look at it in a second. Seppuku. I know. I've seen the rune. I've seen everybody's hopping on the meme. XRP is ripping. Yeah, I know. I mean, obviously XRP is going to go to $2,000. Mr. Green was right the entire time. Bitcoin is a failed coin, and XRP to $2,000. 50 cents to 2K instantly. That's, let's not compare how much, supply is on the market and how much supply pressure there is literally on a month-to-month basis from, this is a nice move back up. XRP already initiated its really, really big move down, and did not recover in the same way. So, this is a massive move up in XRP terms on the daily from wick to wick, but this is a big old move down on expansion, and now it's going back into compression. If it can take out 57 cents and reclaim the lows over here, then sure, yeah, we can start talking about XRP from this swing low, around 57, 58 cents, then it's looking good to come back into range. But, you know, it's XRP. It's probably going to do a whole lot of this, a whole lot of, a whole lot of like, and whoa. And then obviously, because we all know it's coming with XRP, right? It's going to go backwards in time, and then we're going to see it just go up and up and up and up and up and up and up, right? Mr. Green, and I'm using Green for Mr. Green. He did tell me that I was stupid for using charts, but I'm showing you on this chart. This is very technical, by the way. We always go backwards in time. Obviously, I overshot target there, but obviously it's somewhere around here. That's the target. Yep. Never mind that would be basically a a 681,000% move to the upside, with like this 50% of supply hanging over their heads. They'd honestly be lucky to get to $10 in a powerful altcoin market, bull market, and liquidity rotation from Bitcoin coming from like 200,000. But yeah, Mr. Green, you were right. I see the bounce. 2K is incoming. Totally stupid me for looking at lines on charts. I know nothing. I should probably, use your idealistic outlook and only go with my opinion. That because XRP is so amazing, it is the most amazing. It's been in this long form accumulation because 2K is the target, right? I mean, it's got to accumulate more. I mean, it's got to go sideways. Definitely not a useless coin at all. Mired in controversy that will probably follow it wherever it goes. And I hear Litecoin, which, by the way, I actually do like Litecoin quite a bit. I like trading XRP, by the way. It's very predictable. Litecoin, Litecoin obviously in a very similar long form accumulation. So if you actually wanted something that has a better chance of going to $2,000, Mr. Green, you might actually want to look at Litecoin over the longer term. It might have a shot someday. You'll get your time, Litecoin. I like Litecoin, and I actually use Litecoin a lot, by the way. Also another fun one to trade because it trades pretty predictably. Yeah. Also, it dropped. You can see that it dropped right in the bucket here on the weekly. Expansion, retest to the basis, right into the weekly supports here from the lows and the primary volume-based high here that I have checked. Literally spiked right into it at $70.68. It's likely to play around in this area a bit longer as well, just like Bitcoin. We're here. And we have not actually looked at what Jay Powell has mentioned, and I guess they're not going to update this. What's going on here? Do I need to refresh maybe? Let's go ahead and get rid of the swing indicator here, and let's refresh real quick. Oh, yeah. Let's refresh. Oh God, it's breaking. Everything's broken. Yeah, Coinbase doing some Litecoin stuff, and also Lightning Network stuff as well. The competition has started. $45,000 is up for grabs. It's the leap. Our paper trading competition has begun. Cryptic, where are you? Get in on that. And then when they give you the cash, buy Bitcoin. I mean, that's not financial advice. It's just, I think everyone should buy Bitcoin. It's all opinion-based advice. never financial advice, but buy Bitcoin. Trust me, you're going to need it someday. What was I trying to figure out here? Rate changes. Did we not get? Am I living in a time warp? Did they just not update? Oh, that's the press conference. Oh yeah, it stayed the same. That's what I thought. And I probably looked at that earlier and didn't even recognize that one was the press conference and the other one is the rate decision, because they stack the elements differently when they're being checked off or when they're filled in. So yeah, rates stay the same. This is no surprise. Dixie got rejected. I read somewhere along the way in one of the chats. I don't even remember which chat it was now. Dixie, could be in the process of putting in a high. Maybe we're looking at, probably. I mean, to be fair, it just set a higher low and back tested the candle that did so with gusto. It still has a fair shot, especially above 106. It has a fair shot if it can hold 106 to the 105.60 by the basis. So basically above the basis, it has a fair shot for going for, deeper 106 to low 107 region, maybe 107.5. If it does that, you're likely going to see Bitcoin and just about every other asset and indice take a dip. I think it's probably getting a little long in the tooth at this point. Maybe not. 106.18 will turn the pivot back up because it's set that you see that it's setting higher lows at this point. And we have essentially we have higher closes at the moment. We'll see what this updates to coming into Friday. We'll check back in on it. 2-day though, saying the move could try back up again. You can see 2-day upper second standard deviation right there in the deep 106, 107 region. Definitely still in play. 100%. That's where you get the expansion. You start seeing the cool down, the move back to the upper first here, right? So we got the basis. We had the sideways compression. We got the expansion to the upside. We got cool down in BBWP as it mean reverts and kind of hangs out around the upper first. Holds the support, then we get the residual expansion right into an area of interest overhead. And this would be your overhead resistance. So it's still fair game right now. And now if it does break down below 105.40, then we're probably looking at like 105 to mid 104 region again by the 2-day basis. Pressure is against it, but it still has the opportunity to go up and tag those areas. If it does start to re-expand above there, well, look out. One other thing I'd like to note is there's no in trend, and when I say in trend, you have the uptrend here, the longer form uptrend here on the 2-day. We don't have any bearish divergence forming just yet, so you actually would want to see a high put in around here, as you'd want to see it actually put in a higher high on a close and maybe even a higher high on a wick, and get a lower high on RSI here, and then lock in at least one drive of bearish divergence for maybe a more significant pullback. Maybe it goes for a more significant pullback before then, but even on the 3-day, you're going to see that this is your new trend, your new higher low, higher high trend, higher lows, higher highs. There is no in trend bearish divergence. Is there historical bearish divergence forming? Yes, and it already kind of played back to the edge of the bullish control zone on a correction there. So, it's not where I'm not looking at Dixie as being weak right now. Yes, short-term rejections. Yes, the weekly can come back down. And I again, we've got, this big move up, big move down. And then we have a mean reversion back to basically where it started from the big move up, the big bounce after the deviation of some of the macro supports down below. What does this mean longer term? Well, it's getting some ugly candles on the weekly. At minimum, again, the upper first, you got to see that upper first dropped. what zone is that in? It's all confluent right around that low 105 region, 105.40, 105.50 area. Below there, 105, mid 104s. If it really does start pushing down below there, then we're looking at maybe a longer form correction. It's the monthly. Look at the squeeze. This is something that man, the double bottom. If it takes out 107 on the monthly, I'm telling you, we're gonna see a Dixie rocket ship at minimum back to retest its highs up there. So just understand the context of what Dixie is doing. Yes, I get it. There's higher highs up here, but this is a compression on the monthly. This was a move up on expansion. It has taken. It took the zone here, and this is really important to understand. Oh, that is a thick trend line there. My, you have a thick trend line. But if you look here, like we get the expansion up and then the retest of the high and the lower high here, double bottom in that area that is confirmed. And realistically, you take out this high here, this is your reaccumulation. If it takes out 107.34, well, that puts it above the upper first. At minimum, it's going to go for like 108 to 110, possibly even 112 to 112 up here by the close open, and then the high about 115, 114, 115. So that would be on expansion. If it started to get above there, then you're looking at more macro structure longer term, and that would be stupidly interesting. Now remember, Dixie is the U.S. dollar paired against a basket of fiat currencies. The yen chief among them. And the yen is not doing so great. So we'll see what happens. They did dump a bunch of bonds. So, oh, hi, Goddess. How are you? Good to see you. But yeah, this looks more bullish than not. By the way, that monthly at $100.95. That 2-month did not turn 107.44. So literally right around that high, which just so happens to be, on the 2-month. That's the upper first standard deviation. It gets above there. We're looking at a 2-month Stoke turn. We're looking at this being mean reversion back to the basis band. We're looking at this heading up to the highs and higher. Oh, I went through all Bitcoin in the beginning. I also have a video from yesterday that's still relevant. But basically, yes, if Bitcoin closes below 58.8, it has gone for the meme pullback. I mean, it deviated it. And 20 to 22% was about the meme for this market move up on Bitcoin. But just to quickly recap, if Bitcoin fails to recover above 58.8 and subsequently recover 61,350. Excuse me. If Bitcoin fails to recover 58.8 and subsequently reclaim this monthly at 61,350 by the daily lower first, then we're looking at this likely playing back to its current low that was put in at 56.5, which is still within my could deviate and come back in range, but it needs to, if it does deviate here and hold this area, then it's we're looking right into that 61,350 is the criteria that needs to be met for me to start looking to like 63 to 64, 63.8 to 63 to 64, and then back to 65K. Above 65K, it needs to take out $67,000. 67,225 here on spot. On a daily close at minimum to get a trend break, because right now this is a powerful downtrend on expansion to the downside, which is targeting around $53,000 to $50,000. So unless it can hang out in this mid zone, maybe dip a little bit further to the weekly basis band, which is coming in, we'll call it 55 to 55.5. It's kind of oscillating a little bit with price as price comes towards it. I'm I'm not I'm not looking up. Let's put it that way. But if it does meet the criteria of breaking back into the monthly and quarterly zone, above 58.8, 61.350, sure. Then we can start entertaining moves back up to somewhere around $65,000. But it would need to take out the last lower high here. And that is at 67,225. Above there, then it's the highs and higher, most likely. Of course, it does need to get above the prior cycle all-time high at 69K. But, yeah. Looking down right now. Even if it's just a local swing lower, we're looking mid-50s or something like that. Sure. It's a viable area to entertain. If you want to take like the current downtrending move, we can pull a few fibs and see how they line up. We can pull a trend-based fib, and we can see that I am not in the right menu because I have to be in this menu up here. And we can take this this high structure and we can pull this and make a mess of our charts. And we can see that if you really want to go for the memes, you had the meme pullback at $58,000. That was the 702 after losing the 618 here. And actually, we can move this over to this wick. The 888 is at $56,000. The one spot extension is at $55,000, so right around the weekly basis band. And then you start getting into the 1272 and the 1414, which are the primary extension areas on a fib extension like this past the one spot. So if the 55K is lost, then you're looking somewhere around 53K to the 1272 at 52, which is right around that weekly at 51.8 or so. And then just down below the weekly there, $50,000 at the 1414. So that is on a fib extension, trend-based fib. If you're going to take the entirety of this move and fib it, then we can go basically the range lows from a closing range wick low to the highs here. You can see that the actual fib extension, so past the one spot, which was this low, yeah, you can take this low over here if you really want. It's not going to make much of a difference. $56,000 around the 1272. Just below there, you've got the 1414 coming in at 54,500. And then right here, just below this weekly, at that $53,000, we've got the 1618 coming in at 52,200, just above that August weekly there at 51.8. And then we've got the 1786 coming in right here. That's a primary zone that I would be looking for, coming in at just under, well, it's just about $50,000, right? Let's zoom in here. Yeah, 50,325. Those numbers are small. Below there, you've got the 1888 just to satisfy Roca or Torque over there, as they are the keepers of the 888. That's coming in basically $50,000. So it depends on how you pull the fib, like which trend extension you're looking for. But it's all generally going to line up in the same areas. So we can even turn off. You want to have more fun with fibs? I'm hearing hurrahs over here. All right. So more fun with fibs would be like where the last weekly swings were. So you can do swing to swing. So we could take swing high to swing low. You throw in a fib. You can see that we're breaking down from the 618. And in between the 618 retracement level, which this is a weekly, it could wick down below. If it's closing above, then 786 is fair game. Playing around the 618 is still fair game. Below it, look into that basis band, right around that 55, 55.5. Already saw some confluent fibs in that area anyway from the daily. But the 50% is the area that you want to see hold. And where's that coming in? You want to see it hold on a close. And that is coming in at $53,000, $53,300 to be fair. So again, all the same areas. Now, here's another thing. If you want to take closing high, closing low swings from the move prior, or even extend this move down, you can see 618's at 47,500, 47,700. Swing high to swing low. You're looking at, again, where's that one spot coming in? That's at $50,000 on the top side. That was the weekly wick. And, this is all going to come up confluent. And if you want to really get funky with it, you can just pull the entire bear market. So if you pull the entire bear market, what do we get? We get the 786 coming in at $50,000. Oh, but the 618's all the way down there at $40,000 or $39,000, basically $40,000. Yeah, I think that's a little aggressive. That's way past some of the areas that I would be looking for without, we would see substantial structure breaking anywhere below basically 45,500, 47,000. That's where you'd have to look out. Look out below. Things are going to get weird because Bitcoin would be way under production costs. So you're going to see some major shifts if that was going to happen. So this right now is just a normal pullback correction. It's a little bit bigger than the other ones that we've seen this particular bull cycle. Likely going to result in higher lows on the monthly. I mean, it better, otherwise there's problems, right? Like $25,000 is the last higher low, so I guess watch out. Now, from the weekly perspective, you do want to see it holding around $50,000, right? You want to see it holding the top side of this consolidation structure prior to the candle move up. This is a big area of interest. I mean, even from an order block perspective, right? So if you were going to take a look at this, if it continues to push down into that area, obviously this is 50,500 to 53K. So it's the same areas that we've talked about, from historical zones of interest. Those highs that were put in 2021 became an area of interest for our current cycle, right? So you're reverting back to it, not a big deal. I prefer to see a wick through it, not a close below the basis. That's where things get a little dicey. Maybe deviation of the basis is fine, but start seeing closes below the basis, it's going to be, we're looking for probably a really long form accumulation or reaccumulation. I would rather just see a quick in and dip and out if it's going to push down there. And as it stands right now, Bitcoin's still got a chance before close today. Otherwise, its hopes dim for this local wick on this daily to hold up. Doesn't mean it can't. Again, the criteria is very clear to the upside. Got to break back above 58.8, 61,350 on a close, specifically, not just wicks. Not a wick to $74,000 and then all the way back down. Obviously, that would be really, really bearish. But yeah, so keep all that in mind. Yeah. Thank you for those of you that asked about my son. I appreciate that. He's doing well. He just had surgery, but my son suffers from severe seizures. And the primary reason that he's been recovering for a while is because although he had a simple procedure done, putting him under when people are prone to severe seizures, very, very difficult and dicey. So, but he's home recovering from his surgery and he's doing great. So I appreciate all of you that were showing some love and asking about him. As for me, went and stayed at the hospital with him and came home with a cold. So, yeah. So thank you for asking, though. I appreciate that. But he's doing good. Yeah, 12-hour That's just expansion. Nice little move up. Got everybody nice and bullish there for a minute. But it was all false hope. Oh, no. Maybe it can hold. Beware on the hourly downside. If it closes back below, this is aggressive, right? It's trending below the basis, rejection above it. This is, if it does get continuation down, you can see that the lower second, where's that coming in? 55.5. Again, that's that weekly basis band. So yes, I've been drinking a lot of coffee. That's just kind of the way things go, right? Let me mute for a moment. I'm going to throw on some music, and then I'm going to read chat, see if there's any questions, comments, concerns, things that you want to point out to me. Go ahead and do so. Okay, I'm back. I might have to mute again just for a minute. Bobby says something. I did show you earlier in the day 15-minute volume candle from the end of February. Yeah. Yes. Okay, so Bobby is mentioning, so for those of you that have been around a little while, I've illustrated a method for mapping continuation of a trending move using volume. And because I'm not going to go through and do the volume map again, what I will show you though is primarily what you would do on a downtrending move like this. So when you have a trend shift on the daily, so where was the trend break? The trend break occurred when we saw closes below this higher low right here, right? So that was your trend break. So what you do is you mark that, right? So that was your trend break. And then you mark the candle that broke that trend. And then from the top to the bottom, you measure the highest volume lows because it's a downtrend. Whereas when you are looking at the highest volume highs on the way up, so where's the highest volume high that puts in a high, right? And then that becomes a zone of interest, because if you pass that highest volume high, you're looking at continuation, and then you want to see any mean reversion back to that highest volume high. You want to see it hold up, generally speaking, around that volume area. So now it would be on the lows. You can reference when you have a shift in the range, the highs from that move up, but they're not going to be as relevant or as powerful as the trend shift. So you can still have your 50, all these higher volume candles, because these were all higher volume candles on the way up, right? So you have this candle here specifically. This was your big move up on expansion. This was previously Bitcoin trading at around that. This consolidation moved back to the basis here on the daily, moves up, out, it breaks that consolidation, starts to take off on expansion, right? So you saw this peak in volume was some of the higher volume that we had seen relative to the consolidation down here. In particular, that big bear candle there that changed the trend to a downtrend, which is what we're likely going to see occur here. But you know what you're looking at in this candle, this was from the uptrend that you're trying to gauge continuation and support, right? So all of the higher volume 15-minute candles was the example that I was using, is you're looking for continuation. There's still going to be areas of interest on the way back, but now it's not based on the volume, it's based off the SR levels from these areas. And realistically, where's your main SR level? If you're not using historical support and resistance, where's your main SR? I mean, your main support was the close opens here. That's a thick boy. Let's go ahead and bring that down a bit to, you know, this wick low, right? So that was your main support locally, right? And the next main supports, you know, is this area right here at that 53, right? To your downside area, which is around 50,500, but I'd give it room to swing around 50, right? So you've got this new zone of interest that it's in, and you have a high volume expansion set of candles up. Those really aren't relevant. Those are relevant on retest back here, retest over here, but then you have a trend shift, so now you have to measure the volume on the downside, because this was all to deconstruct the order book, right? Because you're trying to gauge the order book for demand and supply on the way up, and now you're doing the same on the way down, demand and supply, or supply and demand because you should be trading it to the short side because trend has shifted. So what you want to do to map out the books or deconstruct the books on this side is now you now have a confirmed downtrend. You go to the high of this particular move, and you start hunting the lows on volume. So in this case, from this date, where was the biggest high volume low? Well, that was right here. That was this bad boy right here. So you just do the inverse of what we were doing back then. We'll do the close in yellow, the wick in white. So this area should hold up as resistance, right? So when you're measuring this, now of course the trend shift hadn't happened, but this is, you would go back and look, right? So you can see that this was an area of resistance, and you can take the full candle body if you want. And typically I've gotten into, when I wasn't really showing it to you this way because it adds more complexity when you're trying to learn something. I typically highlight, and you'll see me do this often, I'll highlight the whole candle body wick to wick, because that is the highest volume candle of interest. I don't care about the profile of the candle. I don't care about anything else. Because we know that if that candle is taken out to the upside, it's going to likely result in price moving up. In this case, it did, and they got violently rejected on low volume, came right back into range, dumped the hell out, and we've got, you know, wick in white, close in yellow, and then you can highlight the whole body of the candle. But because the trend shift technically hadn't occurred yet until we saw that breakdown of the candle that on the daily that I just showed, now we don't really need that full candle. We can just kind of sorry for the pause there. I thought I was going to sneeze and it ended up being a cough. You can see how it knocked in between the two high volume areas. We see another big high volume area of interest on this candle here. It's a nice little doji. And then you can take the close, and then you take the actual wick low, because it all came back into range. Right, so you can take this area, and then you just gauge continuation to the downside past that low. Again, you drop a low, you're continuing trend, right? But it's more about the volume. You don't want to see it swing down and then just come right back up. If it closes below, then you're looking at that continuation. So all you're doing is gauging continuation and resistance instead of continuation and support. You're just doing the inverse of what you were doing in the uptrend. And then, then you can see how it played in between that particular zone, found high volume right in it. We don't need to mark it because it's already finding volume within the same volume structure. It did not close outside of it. Came back up, found this structure as resistance, that high volume candle, finds support at volume here. We see another tower type candle inside out. When you see something like this, really small wick and body, you just mark the wick. Really small wick or shadow compared to the body, rather. That's what I meant. You see that wick acted as resistance, and here we go. Continuation. So how would you gauge that from here? The biggest candle at that point, it didn't set a low though, so it's not really relevant. It can be relevant for really low term time frames for continuation. Is this big high volume candle right here, but it's not really relevant. Now we do see the potential for a low being set here. Nice high volume coming into this lower first standard deviation. Excuse me. After the run back in. If you see that, like this would be swing low set on a close back above the wick high here. This particular wick high is coming in at 57,233. So you can temporarily mark this candle body with yellow, but the low's not set. So understand that this is not going to be the thing to look at. Maybe the current wick low holds. And then you gauge continuation past this high volume area. Now, could it pause at this other wick low? Sure, but then you need to see this area is either going to hold as resistance at this high volume candle, or it's going to hold as resistance and get continuation past this low over here, which is taking out the low. That's not volume based in this case. The higher volume candle is up here. If you want to take this is likely going to act as a bit of support resistance, right? It doesn't seem to have operated that way, so it's not on a swing, so it doesn't really matter for what we are doing in terms of deconstructing supply and demand based on kind of reverse engineering the order book for continuation. So, I mean, it has an opportunity here. It's just setting up a range on the 15-minute at the moment. This is a nice sharp move up, nice sharp move to mean revert right back down. What do you want to see on expansion, right? Like when you see expansion to the upside, if it does pass the basis, you want to see it hold the lower first, right? If the lower first is above the previous low in this case, and it is. So nice little Stoke reset. If it can put in a low, is likely what we'd see. How would this confirm not just a swing low? So a swing low would be confirmed above 52,235 or so. The actual low on the 15-minute would be set, and this could be marked as a continuation area of interest if it passes it. Only if we see a closure back above 57,453. Otherwise, it's the volume is not relevant for our purposes at the moment. Does that make sense, Bobby? Yeah, we're just chilling today. So, I mean, you don't have to watch the whole stream. By the way, anyone who sticks around this long, you're hardcore. I appreciate it. But if you just want Bitcoin TA, I did that in the very beginning. We went over quite a bit. And the video from yesterday is still relevant. So, I mean, we're just following up. Primary 56 to 58 has been hit. Below there, we see a daily 2-day close down below here. We're looking at expansion down. Just make sure you're looking up to around 61,350 on bounces for potential resistance, and then continuation down. So if it does find those, if it bounces up to those areas and finds it as resistance. Also, I want to point out that this dumped off in the last hour of the traditional markets. So traditional markets closed at 1 or 4 on the East Coast. So, right? Are they closing at 5? I don't even remember. They closed. Traditional markets are closed. Well, that was a nice move up and then right back down into the zone. Nice little compression. If we could take out the high on Dow at 38,582 or 38.6, it's probably going to go retest the highs. High side of the zone around 39, 39.5. If this breaks down, though, it's looking down to mid to low 37s. Upper 36s is where it needs to hold. That's the prior all-time high. This is a lower high, continuation of trend to the downside on NASDAQ. If it drops the low, we're looking at continued expansion. Honestly, I could see a retest of the low or a swing of the low at 17. Still looks fine. You still want to see it holding up above around 16.8. Yeah. Ugly. Yeah, lower high, continuation of trend, rejection from the basis. Trend around the lower first, though, so gotta give it a chance at minimum. 502 would turn Stoke back up on SPY here, but yeah, ugly. Yeah, it's ugly. Bitcoin's doing the same thing. Bitcoin is, subject to the forces of traditional markets and the liquidity within them and the liquidity cycles of the traditional market structures. But again, you're going to see Bitcoin continue to diverge in terms of its cycle, in terms of like trying to plan like when highs and lows come in and stuff like that. Yeah. No. I mean, Bitcoin could set a swing low here, and then you mark this. But this is purely gauging continuation and resistance at this point because it is a downtrend. So this is not based on bands. You can use them with it. This is just based on continuation of the move. So you're looking for continuation and reversal points. Using volume as your base case for deconstructing the support and demand zones. So glad that helped, Bobby. Yeah. My son's being difficult right now with his mom. It's kind of funny. Because as soon as I get off here and go in there, he's gonna be a little angel, I bet. He likes to give mom a hard time. Yeah. So, look, I'm not. Little boy's getting in trouble over there. Look, my personal opinion on the long form for the market. I get this a lot. If Bitcoin recovers quickly, especially from the monthly point of view, because Bitcoin's doing something different than it's done before. You're going to hear a lot of triple top talk and a lot of ignoring the actual trend structure. And it's, doomed, it's all over, but, Bitcoin's safe to come down to $50,000 at the upper first, and it's still fine. I mean, from a technical point of view, Bitcoin can come all the way back to the basis. It's above the high structure that it broke. It's above the low structure on the monthly that it broke. And it'd be fine. I think it's highly unlikely. That'd be, by the way, about a 50% drawdown from the highs, right? 35,000 is where that currently is. So that would be a pretty hellacious pullback. And that would be so far below production costs that you would see a really big shift in the landscape for mining. And you can come up with your own conspiracy theories for if that were to happen and, why kind of thing. And, the BlackRock and all these, Fidelity and all of them are conspiring to centralize mining. That would probably be what you would hear, because it would put a lot of smaller outfits out of business, a lot of liquidations, a lot of mergers and stuff like that. So sure. And then they're going to fork the network. They're going to increase supply. They're going to that you would hear all that kind of stuff. So I'm not going to say that would never happen or can never happen, meaning that we get like literally 50% or more below production cost. I just don't see how it's viable, because the opportunity is such that why would these other interested nation states not just fly right in and buy it up, right? Because it's so far under at that point. It would be so far under, and it's already pretty far under production cost after the halving, which is normal. We see this quite often around the halvings. And then it oscillates underneath production cost. But I mean, like, man, if you are one of the interested parties that is a nation state, which we know nation states are accumulating Bitcoin, some that have not announced, we know that they're doing it. It's that we can see it on chain, right? We don't know who, or we have good theories of who, but why wouldn't they just scoop it up before anybody really had a chance to buckle, and or scoop it up and then you spin up your own mining operations and the network is decentralized again? Doesn't matter how many they take under their purview over here in the United States. If you are in China or Russia in state-owned facilities that are mining, or even other countries that you may not have even heard the speculation about, why wouldn't you just fire up your own miners? Because they would. I just don't see it as a viable area to even pay attention to. Bitcoin is flirting with, meme pullback areas of interest right now. So it's not, I think max downside, at least for this particular expansive move on the daily, is somewhere around $50,000 to $53,000. Could it dip under? Could we get deviations down to 47, 45.5? Yeah, and I think that would be aggressive. That would be really like kind of worst case scenario. I feel more comfortable if anything below the mid 50s. We're looking 53 to 58. 53 to 50 rather. And then realistically between 53 and 58 is kind of the big zone of accumulation that I would be looking for. But it's not it's not something that I am overly concerned about. But you are going to hear more conversations like this from people in the space of crypto X, Twitter, if you like, and YouTube. You're just going to hear a lot of it. Why? Because it has to be discussed. I mean, when the targets open up, you have to discuss them. I mean, the biggest thing is like we've seen a big, nice wipeout of OI, and it's below, finally below the levels that it was in range, right? So when we look at the range for OI and where price was holding up and then just rejected, off that wick right there, which is the wick low of the entire range up here, and just dropped that, it dropped that wick and then retested it. What you see here in open interest down here is that if we were going to kind of, if we were going to try to, my son is giving mom a very hard time right now. I'm going to have to go in and help her. Let's see. If we were to kind of take a look at where things are right now in terms of dropping the wick, you know, and then you look at OI over here, we could even move this down a bit, you know, to kind of match it up. We've now seen OI break down. We saw it flirting, you know, on the bounces and stuff initially, but now it's finally broken down, and it's in that triangle that we had previously seen on price. Was also the same type of triangle structure that you saw building up on on OI as well before the breakout. In general, you want to see an increase in OI with price. I mean, that's just natural. So, but to see this nice drop down to, you know, about 15 billion in OI, that's actually that's a good thing. So you want to see, you know, market participants getting washed out of the market to both sides, and then you get the reversal when everybody's scared shitless. I would even like to see OI come lower, maybe even 14 billion. And you can even see that on a rise, because, you know, you have shorts entering on the breakdown and the retest and stuff like that. So, you know, I'm not overly concerned about any of this. I mean, liquidations, you've got some more bulls and bears getting hit on this particular move up today. But of course, longs, bulls taking it on the nose here quite heavily throughout this entire move down, as they were longing that support quite heavily, and of course not in most cases just yellowing that shit on high leverage and then getting absolutely destroyed. Nice, you know, retest here, take out the late shorts, who were the breakdown shorts, and then come back down right to where we were, and maybe screw around a little bit more, try and move back up, move back down, who knows. We'll just have to gauge it, right? I mean, that's what we got to do. And for those that just brought up the 4 hour, could this turn into a reversal candle? Sure, back above 50. I mean, that wick high kind of screws with the pivot number, but I need to see divergence building. And could we get it? Yeah, but we haven't really seen a good low. There is some divergence from over here, from the other structures on the 4 hour. So yeah, back outside of the bearish control zone, you're looking at 58.5, possibly going up testing 59. Scale midline as it stands right now is actually, you know, it's kind of getting back into that zone where we would be looking for a bearish retest of 61,350. It's currently coming in at 61,160. That's going to compress down though, so I would keep an eye on that for RSI. You know, could we see a momentum shift? Sure, we could. Just be aware of where things are. 61K currently for the basis. Lower first rejection, that's going to be your trend. You know, kind of sustaining the trend all the way to the basis, and even mean reversion back to the upper first right now, which is, you know, right in that $63,000 to 63,800 area as it stands right now. Still below the last high that it put in, right around $65,000. So could we see tests up there if it reversed from here? Sure. Still needs to get above there, and then especially on the daily above 67. Below there, it's a downtrend. So could it try for more today at the 12-hour turn? We could be looking at that. Sure. 57,275 maybe. Maybe it starts to try for a bounce here more aggressively in to test that monthly zone between 58.8 and 61,350. You could extend that up to 62 to 63.8, because it has to take out that last high at around 65. So at minimum has to take out that swing from here if it was going to try to bounce back up. Otherwise, you're looking at, you know, even this low structure lining up with some of the pivots, by the way, and some of the bands on lower term time frames, like the hourly 12-hour low structures, you know, 61, 61,000, 61,350 area, right around the lows in that monthly. So just understand, we gotta see we got to see some bullish divergence starting to develop too. So, if you're asking, like, would I be surprised if it popped back up? No, and I also wouldn't be surprised if it got rejected and failed and pushed lower. That's kind of my point. So, my voice is thoroughly shot. I'm going to go help my significant other with my son, who's trying his best to push every one of Mom's buttons right now in the other room. And I will have a recorded video for you tomorrow. And we will follow up with the things that we talked about in yesterday's recorded video. And then, of course, some of the things that we talked about in today's live stream. So I do want to wish you all a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And, of course, as always, stay safe. And with all of that being said, well, Landy out. You guys take care. And gals. I didn't actually turn off the microphone when I switched over, so you can hear me with my cold. My apologies. You all take care of yourselves.